Hello, everybody. Hello. This is Wolf, your mental wolf. And as I introduced the topics concerning the order blocks, I decided to bring it live on the chat so that I can demonstrate how we identify the order blocks and how they are always respected. So, I've chosen volatility 75 1 second. It's a synthetic index offered by Deriv. Deriv is a broker. It's the only broker that offers synthetic indices. These are programmed indices. So, guys, don't forget to subscribe. Hit the bell notification so that every time I drop a video, you get to be notified first. So, without wasting much of your time, we'll jump into our topic. So the first thing that we're going to do is we're going to put our chart in 1 day time frame, and we'll try to identify the highest and lowest the market had gone. I'll try to use as simple English as possible to make each and everybody understand. I won't use the support and resistance, the bullish and bearish terms. No, I'll use as simple English as possible to make everybody understand. Thank you very much. So we're going to identify the highest and lowest the market had gone. So we're going to identify this level as our ceiling, as the highest level the market had gone, and we're going to identify the lowest the market had gone, which is our floor. So we should remember to say the market is within these two levels, these two order blocks, these two zones, these two ceiling and the floor. That's what the market is. So remember, I said in the other lesson concerning the structures to say the market moves in a stair format. The market will move in a zigzag format as it forms any movement, any direction. Let's assume to say it's going up. It will be going in a zigzag format, more like stairs. As it goes down, it will go in a zigzag format as well. As it ranges, it will be in a zigzag format. Let me show you one thing. The market at this level, it was ranging. The market at this level, it was ranging. All this part, it will go up, down, up, down, up. So you can see it was ranging. But as it started breaking out, it started respecting this trend line. It kept on coming back to bounce back on the same trend line. If you can see, not until we saw a breakout here. So as we are placing our order blocks, we'll be placing them in the levels where the market is making a turn from. Hope you understand where the market is making a turn from. That's where we'll be identifying. So we try to take our chart into a lower time frame, like 4 hours, trying to see further information. So if you remember, I said as the market broke out, it started respecting this trend line. You can see. But the order block as well, there were some buyers seated on this order block. Which we can see the market was being respected by bouncing up, bouncing back up, bouncing back up. So that was our focus. This order block was our focus. At this level. So we are trying to get more information. Let's try to identify more order blocks. There was here as well. So the only thing that you're supposed to know is whenever the market is within such two order blocks, then it's ranging. We wait for a breakout. And there it came. Boom. Retest. This was now our second entry focus. This was our second entry focus. So you should know to say order blocks are always respected in the market. Order blocks are always respected in the market because that's where the big boys are trading from. So you need to be smart to identify where the big boys are seated, where the big boys are pushing the market at. So we try to take it into lower time frame. So if you can see, we are getting to find more of our analysis in higher time frame being respected. More of our analysis in the higher time frame being respected. So after the market went so high, up to this level, it started pushing low. So the time it started pushing low, it started creating the same zigzag format as I said. Let's try to identify this level. Let's try to identify this level as well. So we should expect to see the market somewhere here, coming somewhere here, for which it will be a rejection. Let me show you this, guys, and I want you to follow this chart because it's a live chart. It's a live analysis as of today, Thursday. It's a live analysis. The market will come up to somewhere here. Then after that, the market will push low. So all this part will be a rejection in higher time frame. It will be a rejection. We've already seen a breakout, but this order block will be retested 3 times or 4 times, and we will see such type of rejections. So if you're taking this trade, if you're selling on this order block, make sure you place your stop loss above here. This is where you place your stop loss above here, above this order block, which we haven't yet identified, above this order block. So if you are taking some trades, remember we are starting to sell here, we'll be selling up to somewhere here, we'll be selling, but remember to put your stop loss above here, even above here if possible. If your account is a bit bigger, even above here, it will be okay. So remember that, guys. Remember, we'll see something like this from this market. Let's try to go into 30 minutes time frame. We'll try to see if what we are analyzing, it's making sense. So let's try to see some more of these order blocks, even in lower time frame. Remember, guys, as I said, the market moves in a zigzag format. So it might be pushing low, but it will be moving in a zigzag format. It might be pushing high, but it will be moving in a zigzag format. It might be ranging, moving from side to side, but it will be moving in a zigzag format. So our only duty as retail traders is to find that turning point where the market is turning from. That's our main focus. That's our main interest in the market. Forget about how the market is jumping this, doing that. Focus on finding that turning point. Where is the market turning from? Because that's where the big boys are seated. That's where they are making the money from. And you can only identify those turning points by identifying the order blocks. where the market had turned previously. Expect something to happen there again. Expect something to happen there again. So the only thing you need to do is to measure how that order block is. Is it a strong point or is it a weak point? If the market comes to this level, will it push it out or will it respect it? By looking at how it has behaved previously. How it has behaved previously. So that's what we focus on. So in lower time frame, like for me with my strategy, it's where I'll be just trying to find some entry points. Like in 30 minutes, I'm just trying to find some entry points. So if people are trying to ride with this one, remember it's coming somewhere here, but we are not buying because the market is already pushing low. So it's a very risky game. We are looking for selling, not buying. So we are starting to sell somewhere here. We will start selling. If you've got big accounts, you can start selling even from low order blocks. These weak ones, because these are weak. These are weak. I'll use horizontal lines. These are weak. These are weak. These are weak order blocks. These are weak order blocks. We should expect to see the market breaking these order blocks, coming here, and we'll start looking at selling somewhere up here. Somewhere up here. This is our main interest. Somewhere up here. This is where our selling journey will start from. So somewhere here we'll start looking at some selling, and we should make sure to place our stop loss. We should make sure to place our stop loss. So that's what we're going to do, guys. The lesson will still continue about order blocks. If you've got some more questions, please feel free to ask. Feel free to inbox. Feel free to WhatsApp me. I'll drop the link in the description below. Remember, if you need to if you need to trade some synthetic indices, Deriv is the only broker that offers synthetic indices. The link is in the description below. You can click on the link to open the account. You don't need any verifications. You just go through and trade. Thank you very much, guys. Remember to subscribe. Your Minter Wolf.